Hey guys, good afternoon, wherever you are, all over the world. Welcome to our channel, The Forex Athletes. We shall be taking you on a journey to financial freedom. We do hope you stay with us and you ride with us on this journey. So today I shall be briefly talking about market structure, quick introduction to market structure. And we have three types of trend. One, we have the uptrend, the downtrend, and the consolidation market. Now, in an uptrend, what is expected in an uptrend is only buys, while in a downtrend, it's only sells. In a consolidation market, we do nothing. Now, let me explain quickly an uptrend. An uptrend comprises of higher highs and higher lows. And there's a term in the Forex industry, which is you buy low and you sell high. So in an uptrend, you are expected to buy the higher lows, and in downtrend, you are expected to sell at the lower highs. Now, why are you buying at the higher lows? You are buying at the higher lows because once you buy here, the price will increase. And once the price rises, you'll be in profit because the price is increasing. But let's assume you bought here at the higher high. The moment you press buy, the price will start coming down. And that way you'll be in a drawdown, or you might take a potential loss on that trade. So it's advisable to always buy on the higher lows, higher lows, higher lows. So that is an uptrend. In an uptrend, we buy only. Now, in a downtrend, what we do in a downtrend is we sell. A downtrending market, the market is going down. You want to be selling in a downtrending market, and you want to be selling at highs. Remember, you sell high and you buy low. So you sell highs at the lower highs, at the lower highs, at the lower highs. Don't be caught selling at the lower lows, because if you were ever caught selling at the lower lows, the moment you enter that price will start going against you and you'll be in a drawdown. Then you might potentially hit your stop loss on that trade. So it's always advisable to sell high. So always make sure you are selling at a lower high at all times. Do not forget this. Then now for our third description, which is the consolidating market. The market is ranging at this point because you can see price bouncing from highs to lows. There is no decision. There's an indecision in the market. It is ranging, meaning both buyers and sellers are at equilibrium at that current price. Because you can see when the market comes to the resistance, they reject it and goes again to the support. It bounces again to the resistance, again to the support. So at that particular point, there's indecision in the market. So it's always advisable to stay out of this market. Then you wait for a breakout either to the upside or to the downside. If it breaks to the upside, you simply you buy. But you don't just buy anyhow. You wait for what we call this is the break. After the break, you wait for your higher low. Then remember, take it to the upside. You want to be seen buying at the higher lows after this breakout from this current price. After the breakout from the current price action. So please remember, so in a consolidation market, it's advisable to stay out of it. Do not do anything unless they break out either to the upside or to the downside. If they break out to the downside, you repeat the same thing. You only sell at the lower highs. So that is that on that. So now we shall be moving on to the fractal nature of price. So now, due to the fact that price move in an higher high and a higher low formation for an uptrend market, but it's not always so. After price moves that you see your higher high, there's a phase called the consolidation phase. The market must pull back. So that pullback is also another trend. So let's assume this is the 4-hour price action. So this is your higher highs. This is your higher highs. Then this is your pullback. Your higher highs, then your pullback. So now this pullback, you do not want to be caught buying in a pullback, because the pullback will be a sell trend on a lower time frame. Can you see? To be a sell trend on a lower time frame. So please be careful. Always make sure you annotate and analyze your price action well. Clearly label it so you know which side you are on in the market. Because the market is fractal in nature. Fractal in nature means another trend can be found inside an uptrend or downtrend. Meaning in an uptrend, you can still see bearish price actions, while in a downtrend, you can also see bullish price action. So that is why the corrective phase of the market, which is a pullback, must not be traded in line with the overall trend. So if you are in an uptrend, do not trade the pullback. If you are in a downtrend, do not trade the pullback. The pullback is against the trend. So please be careful of this. So it's the same thing for a downtrend. And also you can see the consolidation market. What did the market do? You can see the market kept on bouncing, gave you high here, it came again, lows, highs. So all these are just false breakouts. But you can see after the market broke this high, it didn't form a higher low. It came back in to the market, into that price range. But if you put your support line here, you can see what we are saying. The market never ever retested that support level. So it kept ranging in between. So this is the fractal nature of price. And internally, you can see some uptrend on the lower time frame. If you check it, you will see what I'm talking about. So we shall be going to the live charts soon once I'm done explaining these terms. So the next term I'll be explaining is the phases of the market. The market comprises of just two phases, which is the impulsive phase and the corrective phase. The impulsive phase and the corrective phase. So these are the two phases. So now what do I mean by impulsive? Impulsive phase just means when price is going to the upside, for example, then it's correct. Again, you have under impulse. Correct. Don't mind my annotations. This is not picture perfect, but I do hope you guys understand what I'm trying to describe here. So now you can see that the market comprises of just two phases. One, the impulse, the correction, the impulse, and the correction. So these are the only two things you'll be doing in the Forex market. Likewise, in a downtrend, you can do the same thing for the downtrend, the reversal. So let me quickly do that for you so that you understand clearly what I mean by the impulsive and the corrective nature of price. So now this is a downtrend example. Price kept on coming. Now, can you see what I just meant by this? So now this is your impulsive phase, your corrective phase, another impulse, another correction. So these are all the things the market do, just these two things. So you just want to know, where are you in the market? In a downtrend, you only want to be caught selling during an impulsive phase. You don't want to be caught selling during a corrective phase. Because if you are caught selling during a corrective phase, there's a high chance that the trade will go against you and it will result in a loss. So guys, please take note of these two phases of the market. So now let's go down to a live example. So I'll quickly be describing the price on a live chart now, a live example, so you can understand what I mean with the concept of market structure. So first, we shall be discussing an uptrend, then we'll move on to the downtrend, then we'll go again to the consolidation example. So let's quickly look at this price action. This is the 4-hour chart on volatility 75 index. Now, can you see here, this a higher high? Why is this an higher high? Because you can see clearly to the left that a structure was broken. That is why they call it market structures. A structure simply means the previous highs was broken. And when a previous high is being broken, it forms a higher high. After the higher high is being formed, what is expected of the price is the higher low. You can see the pullback, which is also the corrective phase. And if you can see here too, what do we have here? We have the impulsive phase of the market. You can see the market impulsed to the upside, then corrected again to the upside, then impulsed again to the upside. Corrected again, to the downside, and impulsed again to the upside. So please take note of this. Then now, after we had our higher low here, after we had our higher low formation here, what do you expect? You expect another higher high. So that's why I'm telling you that you always buy at the higher lows. Now you bought here at this higher low. Look at the way price rose all the way to the upside. But if you are caught buying here, can you see how price came all the way down? You'll be in a huge loss, and that is not good for a forex trader. You always want to be following the rules of the game, and the rules state you only buy when the market is at higher low. Now the market rose to higher high, again it came again to higher low. Can you see another structure was broken? That was why this higher high was formed. Again, higher low. It went all the way up, higher high. Another structure was broken. Why didn't I label here as the higher low? Because this structure did not break these higher highs. So here is not the higher high. So please take note. Whenever price breaks the major structure, that is where we will label as the higher highs, not this area here. So that is why I could not have labeled here as the lower high, as the higher low, because it didn't have its own higher high. This is where the move started from. So please take note. Again, here is the higher highs. Then now what happened after this price formed? We're expecting that price will stop somewhere here and rise again. But look at what happened next. After price formed the higher high, what happened next was that price broke that lower low structure. You can see it. The higher low structure was broken and it formed a lower low. So that means price has shifted from a bullish market into a bearish market. So please take note. So you can see here that the higher lows was being broken. And that is why the structure shifted from a bullish trend, which is an uptrend, into a downtrend. Now we shall be talking about the downtrending markets so we can understand the concept even better. So now the market came from the higher highs and broke the higher low formation, which then formed a lower low. After the lower low was formed, what happened? The market pulled back and formed the lower highs. And what did I tell you in the beginning? I told you that you should only sell at lower highs. Remember, sell only at the lower highs, because you sell high. If you are caught selling here, can you see? Market rose and you will be in a loss. So please remember. Now, after that structure, the market broke the next lower low formation, forming a new lower low. After it formed a new lower low, what do you wait for? You wait for a pullback, which is also the correction. It formed another lower high. Now you can see each lower high, this lower high is lower than the previous lower high. So please take note of this. Make sure your lower highs are lower than the previous lower highs. Now, after this lower high was formed, it broke another low formation. You can see the markets came all the way down and broke this structure, forming a new lower low. After it formed the lower low formation, what do we expect? To expect another pullback. After the pullback was formed, you can see another lower high formation was formed. And this is where you want to be seeing selling price. You want to be caught selling price at these areas. You don't want to be selling at a lower low. Remember. After the lower high was formed, what is expected of price? Price is expected to break the next lower low to continue the downtrend, which it did. The new lower low formation was formed. Again, it pulled back and formed another lower high. Again, the lower low was broken, still telling us that the market is still currently bearish. The market is still in a downtrend. So this is the explanation of a downtrending market. So now let me look quickly for an example, a quick description of a ranging market. Now, it's not picture perfect, but I will use this example so that you can easily understand what I mean. So now, for this example, if you look at this price range from here, you can see that price was consolidating at these areas. If you look at it carefully, you remember what I said in the beginning of the class, that a ranging market comprises of only highs and lows, and it will keep bouncing off support and resistance level. So look at this, it kept on bouncing, it kept on bouncing. So I will explain it now using this price range. So now look at it, bounce at the resistance, came to the support. It bounced again at the resistance, it came again all the way to the support. Kept on doing that. Remember what I said in the beginning, until you see a breakout. So a breakout finally occurred here. But what happened that this trade didn't sell for long? You could have capitalized on the sell here, but it's not advisable because the overall trend of this market was an uptrend. So that was why the market, because assuming this price broke past this low, then the downtrend will be confirmed. But the price didn't break out of this low right here. So meaning this higher low was higher than the previous higher low formation. That was why the uptrend was maintained. But you can see the range which price formed. So please take note, it's not every range you just buy or sell from. You must take into category which trend the market currently is in. And at this point, you can see that the market was in an uptrend. So please be aware. So with this few explanation of mine, I hope I've been able to make you understand the concept of market structure. It is not hard at all. Remember, what you do in an uptrend is buys, and what you do in a downtrend is sells. These are the two major things you do. You buy low and you sell high. Thank you guys. I'll see you guys on the next video, and I shall be discussing change of character or shift in market structure. So see you guys, and please guys, do like and subscribe the video if you want to see more content. Thank you.